Social Security and taxes for single people. Because Carl was on the live stream yesterday. You never do anything for single people, Josh. You don't think about us single people. I said, I do single people all the time, Carl. I got single Susie out there. I got Scott single. I've done single people left and right. But be it as it may, by demand of my audience, who comes number one, I put my audience before I put myself. We're going to do Social Security taxation for single people. All right, this is actually pretty simple, my friends. So the first thing we got to do is remember, we got to figure out how much of our Social Security benefit is subject to taxation. So there's a Texas two-step here. All right, we got to say we have a certain amount of Social Security. How much of that is subject to taxation? We know for a fact that no more than 85% will be, but you might be surprised. There could be a whole lot less, and that's what we're going to figure out. All right, so we're going to assume that my man Carl's got $30,000 in IRA distributions, and he's got $36,000 of Social Security. So what we do is we got to figure out how much of that Social Security is subject to taxation, and we do that by figuring out what's called a provisional or combined income. All right, and we're going to show you how to do this. All right, so we take half of his Social Security, first and foremost. So we divide his Social Security by 2. That gives us $18,000. And then we add the $30,000 of other income. It doesn't have to be IRA distributions. It can be earned income. It can be pension income. It can be long-term capital gains. It can be municipal bond income. Just whatever the other income is, we add that to it. In this case, IRA distributions are the easiest because most of us are going to have that. So now Carl's provisional income is $48,000. The $30,000 from his IRA plus the $18,000 from his Social Security for taxation purposes of how much Social Security is going to be taxed. All right. So we take that $48,000. Now, for single people, the first $25,000 is tax-free. All right, tax-free. The next, from 25 to 34, 50% of that is subject to taxation. Anything over 34, 85% of that is subject to taxation. All right, so for singles, let me write this up. For singles, and Carl doesn't want to be single. He wants to meet a lady. He wants to meet a lady, but no lady will have him. No lady will have old Carl. All right, so first, $25,000 of provisional income is tax-free. Next, $9,000, 50% of that is subject to taxation. Anything above that, 85% is subject to taxation. All right, now I can't remember what our provisional income is, so hold on just a second. I got to do it again. Took 2 seconds to do it, so our provisional income is $48,000. Why did it take 2 seconds to do it? Because I actually learned how to do this on a board or a piece of paper. You should do this yourself, man. I'm telling you, it's important to understand how this works, especially when it comes to retirement planning. You should really just learn to figure this stuff out. It's easy once you get it, man. Just take a whiteboard, take a notepad. And I don't like, and you can do it in a spreadsheet, but I think it's better to handwrite. I think you get a better grasp. I think there's actually studies on that anyway. All right, so we know the first $25,000 is tax-free. That leaves us $23,000 left. We know the next $9,000 is subject to 50% of that is subject to taxation. And that leaves us, what's that, $14,000 left. And we know that's going to be subject to 85% tax. Now, I say subject to taxation. I'm just, we're not paying tax on that money yet. I got to bring that over to the 1040. Remember, it's a Texas two-step here. So we know this, we got $4,500 here will be subject to taxation. Then 14,000 times 85%. Times 0.85, 11,900. All right. So again, first 25,000 is tax-free. The next 9,000, 50% of that is subject to taxation. Anything above that, 85% of that is subject to taxation. So we got 11,900. We add 4,500 to that, and 16,400 is what this is. 16,400. And that's what we're going to bring over to our 1040, 16,400, if my math is right, and I believe it is. All right. So now we take the provisional income, which determine how much of our Social Security benefit is subject to taxation, which we know now is 16,400. All All right, $16,400 plus the $30,000 of IRA distributions. So we add both those, we got $46,400. That is going to be our AGI, $46,400. All right, now I'm not going to figure out that. We'll get on the right capital here, and I'll show you here. So here's Crazy Carl's $3,000 a month Social Security, $30,000 IRA distribution. His total income is $66,000. His taxes are $34.64 on that $66,000. So let's go to the tax, and we'll see what the 1040 looks like, shall we? And we'll go to 1040. 46,000 right there. Yep, I got it right. So 46,400 is his taxable or AGI, not taxable income. Got to make that discernment because they're two different things, significantly different. 30,000 is IRA distribution. 36,000 is the Social Security income, but his Social Security income, only 16,400 of that is subject to taxation. So 16,400 divided by 36,000. That's less than half of his Social Security is subject to taxation. So his AGI is $46,000. You take away your standard deduction, and his total taxes are $34.64. All right. So from an effective tax rate, and he's going to be in the 12% tax bracket. But from an effective tax rate, this is interesting. You take this amount, $34.64, you divide that by total income, which is this plus that. Was that $66,000, which is 5.2%. And now we're going to go here. I'm going to show you something interesting. Effective tax rate. They got 7.4%. Whoa, how did they got it when I got 5.2? Because Right Capital, they're assuming, well, they're not assuming. They're saying you have $3,400 of taxes on $4,640 of income. That's how they're getting that effective tax rate of 7.2. When it's much lower than that, because the only thing that matters is how much income do I have to spend? How many dollars do I have? I have 36,000 plus 30. I have $66,000. Of that, how many dollars I've had? How many dollars do I spend to Uncle Sam? $3,400. Thus, my real effective tax rate is 5.2. Right Capital is overestimating your effective tax rate, which I don't like, but I get what they're doing. They're saying, look, this is your AGI. That's your taxes. That's your effective tax rate. I don't like that. I wouldn't do that. I think you do it on your actual income, but that's okay. Be that as may. And so we're going to come down here. I wanted to show you something else here. Hold on a sec. What was I talking about? So we go to estimate right here. We're going to go. So you see, we're going to go to income. There's going to be a 12% tax bracket. So he's in a 12% tax bracket, but notice he's actually his effective tax rate is actually 5.2. Even though he's in a 12% tax bracket. So this is what I always talk about. Should I do Roth conversions? Well, if you do Roth conversions, you're losing that 5% effective tax rate, and you're immediately paying 12% right out the gate. So that's a pretty significant tax hit. All right, part two of this. Watch this. All right, so we know for a fact his total taxes here is $3,400 roughly. So we're going to write that down. $3,400. All right. So I'm going to show you something. Watch what happens when we have no IRA distributions. Go to income, we're going to right there. Blink. Watch what happens. He's got $36,000 of income. It's all Social Security. What do you think his tax is going to be? You know what it is, right? It's big fat nothing burger. $36,000 of income, no from Social Security, no taxes. Why? Because $36,000 of income, you divide that by 2 to figure out your provisional income in terms of how much of your Social Security is subject to taxation. That's $18,000. We already said the first $25,000 is tax-free. So there's no taxable Social Security, and that's your only income. There's no taxes. People lose their minds when I say this. Like, dude, if Social Security is your only income, you're not paying tax. It's just that simple. It's nuts, which is why if we can increase our Social Security by drawing down IRAs and stuff before we take Social Security, that's a wonderful proposition because that means we have more Social Security, less taxes. All right. So, but I want to point out there, notice you got no taxes. But when we added that $30,000 of income, what happened? It made our taxes go to $3,400. All right, so I want to point this out. So in this case, $3,400 divided by $30,000 of income. Because he had no taxes, but we added $30,000 of income, which meant we now have $3,400 in taxes. So our effective tax rate on that $3,400 divided by 30,000 is 11.3. Because by adding that extra little bit of income, $30,000, we now have $3,400 in which to pay tax on. So that $30,000 basically costs us 11.3% in taxes. Now that might not seem that bad, but it can get bad as you get up in the realm of, I think for singles like 60, 70,000 bucks or something like that. I can't remember off the top of my head, but that's a tax torpedo because he's only in the 12% tax bracket, but he would not even be in that tax bracket if he had no distributions from his IRA. But because he does, that makes some of his Social Security subject to taxation. Let me show you again. So if we go to the 1040, as well as the other amounts of income, that $30,000 of income increased his income, his taxable. Let me just show you the 1040. All right, so he's got $36,000 of income. What's his total AGI? Nothing. So now we add $30,000 of income. I hope this makes sense. It probably doesn't, but this is such a dastardly thing. It really, really annoys me. But middle class Joe, he'll take care of us because he cares for the middle class. We add $30,000 of income, but now we have $46,000 of taxable income. That $30,000 of income not only gave us income tax to pay on that, but it added $16,000 from our Social Security. Because previously Social Security was tax-free. But now because we added $30,000, we brought $16,000 of our Social Security to be subject to taxation. So that $30,000 of income actually increased our taxable income to up to $46,000. I hope that makes sense. That is like a 50% increase in the amount of income that we're declaring to the IRS. But we didn't add any more. We don't have more than that. We just had to pay taxes what was previously tax-free. And that's a dastardly IRS. It's not the IRS, it's the politicians, man. I hope that makes sense. That's a tax torpedo right there. Again, you had $36,000 of Social Security, none of it subject to taxation. Now you had $30,000 of IRA distributions. Not only is that now subject to taxation, but now $16,400 of your Social Security. So we added $30,000 of income, but we increased our taxable income, or AGI, same thing. I mean, you're going to take your standard deductions. I get that, but we increased our amount of income that's subject to taxation by $46,000, even though we only added $30,000. But the politicians care. They don't freaking care for 2 seconds flat, dude. Unless you're in a blue and yellow flag, then they care. They don't care about us. Love your thoughts. We'll see you. Do a better job at advertising. By the way, you can join my locals. All right, it's in the Doobly Duke every Friday, 4 p.m. Eastern. We do a live stream. And if this is helpful to you, these videos, buy me a cup of coffee. It's in the Doobly Duke as well. Decaf, please. Click the thing to buy me a cup of coffee. All right, we'll see you.